let's now go behind closed doors here and talk through an actual case study. So I'm going to keep this business name close to my vest because this is non-public information. But let me break down. This is an actual client. So we're going to go back in the time machine. This is 2023. So it's going to get a little bit confusing because the qualified small business stock rules were rewritten with the new tax bill. So when this entrepreneur did this, it was the greater of $10 million or 10x your basis instead of now it's $15 million or 10x your basis. So this entrepreneur sold his SaaS company for 15 mil. All right. So he sold his for 15 million. So he had these capital gains. He wanted to reinvest these proceeds. He was trying to figure out what to do. And the private equity company that he sold his software company to for 15 mil had another company in their portfolio, software company in a Dallas, Texas opportunity zone. And it was not doing very well. So private equity came in, bought this other company, completely unrelated, and it was just like running into the ground. So what this guy did is he said, okay, well, I got this 15 mil of proceeds. He took 6 million of that, and he went and bought that software company that was failing from the private equity company. And then he opened up shop in Dallas, Texas, and in a qualified opportunity zone in Dallas, Texas. So he set up a QOZB, which is a qualified opportunity zone business, bought it from again, private equity. Private equity bought it for 25, and then they sold it for 6. So that's where we're at now. So an entrepreneur sells for 15, takes 6 million of his proceeds, and goes and buys a new software company, and he sets up shop in a qualified opportunity zone in Dallas, Texas. The other 19 million.
That's because he's an expert in that space.
Yeah, he built a SaaS business and he sold it. So
I would say don't try this at home unless you're an expert. Yeah. Buy a failing business if you don't know how to turn it around.
100%. The other 19 million, the other 9 million, this guy just took to the bank, paid taxes, whatever, right? We're not going to worry about that.
Right.
So he bought this business. He then does an F reorganization because this business he bought was not taxed as a C corporation and he wanted to qualify it for that Section 1202. So he does an F reorganization to start his 5-year clock to convert this to a qualified C corporation. With the F reorg, you keep your EIN, you keep your contracts in place, so you don't have to worry about any of that kind of stuff. So now he owns the qualified small business stock in a qualified opportunity zone. All right, so that's kind of where we've got now. So when he did this, again, he just did the flip to the F reorg right after he bought it. So it's valued at $6 million. And so now when he sells, he's going to get, again, $6 million is his new basis in the C corporation. So 10 times that, it's $60 million. So again, when he sells this new business, he's going to have to pay taxes on the first $6 million. But then anything above that $6 million, up to $66 million, because it's $60 million of growth, completely tax-free. So let me pause, take a breath, and then we'll kind of play out some scenarios here of how this can actually quantify the savings this guy can potentially stack.
Yeah, that's incredible. And so obviously he's going to defer the capital gains for 5 years. Capital gains,
yep, on the 6 mil.
And then he's going to get, now he's involved in this business that he's going to get no capital gains if he holds for more than 10 years.
Spot on. So I kind of put together just some rough numbers on 2 different scenarios. So let's assume that he sells his business for $25 million beyond 2028. The reason 2028 is because, remember, he did this conversion in 2023. So in 2028, he meets that 5-year rule. So then he gets that $10 million or 10x basis exclusion. Again, why is it 10 million instead of 15? Because this was pre-July 4th, 2025 qualified small business stock.
Right.
So he's going to pay taxes. If he sells for 25 million, he's going to pay taxes on the first 6. He'll pay long-term capital gains. So that's 1.2 million in taxes. He's not going to pay any more taxes on the other 19 million. So he's going to save 3.8 mil. So that's a conservative scenario. He saves the $3.8 million scenario or taxes, plus he deferred another 1.8 or 1.2 million dollars on that 6 million for 5 years, right?
Right. So he could have invested that, even if he put it in cash or CDs or something. He's going to be making money. Hardly ever in the tax code can you make money off the government's money while they're waiting for it. Right?
So true. Yep.
So that's really powerful. I like that. And you know what? 3.8 million. I always say 3.8 million here, 3.8 million there. Pretty soon you have some real money.
Yeah, pretty soon, yeah. All right, so let's do an aggressive scenario. So let's assume this guy scales this thing, sells it for $100 million, again, in 2028. So again, he's going to have to pay taxes on the first $6 million. That's $1.2 million in taxes. He's not going to pay any taxes on the next $60 million because, again, it's his $6 million times his 10x. So from 6 to 66, 0 taxes there. And then he's going to have to pay taxes from 66 to 100 million. So all in, he's going to pay 40 million of the 100 million is going to be taxable. So he's going to pay 8 million in taxes instead of 20 million in taxes. So $12 million of total tax savings. And this is just for that qualified small business stock, right? Now, where this can get crazy is if he holds that stock for beyond 10 years, completely tax-free. Because remember, he did it in a qualified opportunity zone. So he deferred the taxes on that $6 million purchase, which is 1.2. So he deferred the taxes there. If he holds that for beyond 10 years, which is beyond 2033, no taxes at all. So when I talked to them, I was like, dude, you are stacked. Like, what's the game plan? He's like, well, if someone offers me 50 or 100 mil, like, of course I'm going to take it. I'm not going to wait the full 10 years. But if I don't find a buyer, then I'm just going to wait 10 years and then I'll pay no taxes at all. So he's like, either way, I'm set up pretty good, right? And I'm like, you are set up pretty good, my friend.
It's like pay me now or pay me later. He's going to get money either way, and he's going to get a tax relief benefit from the IRS based on these laws. And the longer he waits, the more a benefit he gets. That's pretty powerful.
All about structuring. I think that's the important thing here. It's like this entrepreneur had the foresight to be connected, had a liquidity event, set himself and his family up for forever, which is awesome. But then as he thinks through, like, hey, what's my next season? Understanding, like, hey, what is qualified small business stock? We just described exactly how entrepreneurs can use it. And what is a qualified opportunity zone, right? And for him, it met his fact pattern that he wanted to set up shop in a qualified opportunity zone in downtown Dallas in an area. His engineers were willing to come in and work every day there. So it all worked out really well. So having the foresight, that was what is so cool, is that he wasn't reactive. He knew the road ahead of him and the lay of the land, and that's what I think was like very, very awesome.
Yeah, I think there's two things to touch on here from a planning perspective. One is so often we see entrepreneurs not plan the exit very well.
Yep.
So they don't do good books and records. They don't have their P&Ls and their model P&Ls. They don't get good deal terms. All those things that they didn't do. They don't have a leadership team that can run the company without them. All the things that they make in mistakes in getting the highest price for their company. But then they don't do the planning about how do they structure it for the future and for the exit and for the taxes and for the asset protection. And all those things have to be thought about, because sometimes entrepreneurs do all the exit stuff right. They get a huge check. They owe all these taxes. There's no game plan. And then they miss out on things like this stacking strategy.
Yeah. All right, last visual we've got here on this. I just have put together a visual just for those at home here, watch it on YouTube. What does this look like in terms of the flow chart of what this entrepreneur is doing? That, again, is really awesome. So just starting through step by step, breaking it down of the OZ selection, doing the qualified small business stock conversion through an F reorganization and stacking it, and then just kind of showing some numbers on what this looks like. So I was pretty impressed. This guy is he's a player, so I was proud of him, and I'm hoping that he has this liquidity event, right? I mean, there's always the risk that he can't sell the business or he can't turn it around. I mean, that was a risk, but
absolutely,
if he turns it around, he's going to make a bunch of money. Good for him.
Yeah, I love it.